Hello everybody and welcome to the second video in the hedge fund accounting series, the top 5 terms that you need to learn about hedge funds. This is not so much about accounting as much as about your understanding of hedge funds. And obviously the first thing you ought to know is what is a hedge fund. Okay, because the interviewer or the panelist out there wants to know whether you have heard of this term. Many of us would have heard of these terms because we watch news channels, we are reading on Twitter and LinkedIn about hedge funds. Many of us would have heard that they are risky assets, etc. So let's try and understand what is exactly the meaning of a hedge fund. And if you're going to include these 3 points in your understanding, make sure that you will, comprehend these 3 points. Hedge fund is a pool of funds. A pool of funds means different investors make different contributions into that pool, and therefore this is called as an investment vehicle. It is very different from mutual funds because hedge funds take in capital from large institutional investors only. Literally, the minimum sums of investment include something like $1 million plus. This money, this pool of funds, is then collectively invested in securities and commodities. Have you heard of the concept of general partner and limited partner? If you've learned accounting or economics, you'd have understood the concepts of a sleeping partner, okay? A sleeping partner is one that is a capital contributor to the firm. Similarly, in hedge funds, we have general partner and limited partner. The general partner is the more active partner in a hedge fund. They set up the hedge fund. They go through the regulatory process of filing for registration, etc. They collect the capital from the limited partners. They literally structure the entire hedge fund, and along with the limited partners, they contribute capital and they also invest the pooled funds. Okay, so it's structured like an AMC or an asset management company. Limited partners, on the other hand, is a mere capital contributor. The limited partners do not take investing decisions. They don't actively participate in the day-to-day affairs. And because the capital of the investors or the limited partners is being invested by the general partner, the limited partners pay fees to the general partner. These can be both management fees as well as performance fees that they have to pay. What about the third question? Have you heard of the term AUM or assets under management? Okay, now most pooled funds come up with this concept called as assets under management. AUM is nothing but the amount of money that is collected by the AMC, that's the asset management company or the hedge fund, that is invested in different securities. Now, AUM is a little more than that, okay? They have 2 different variations of this. The one is is valued at the cost, and the second is valued at the latest market price. So this represents the total funds that is invested, which includes investors' capital contribution into the fund, and this AUM is considered to be a performance attribute. That means if the fund manager performs really well, okay, more capital comes into well-performing funds. So then and more capital comes into the well-performing funds, the AUM will increase. If the market value of the assets increases, the AUM increases. So then that's the case. Fourth one, what are the kind of investments made by hedge funds? Okay, so are there any legal requirements that hedge funds make only these kind of investments? Is there any regulatory oversight on these matters? No, not really. Okay. Every hedge fund is designed by the hedge fund and it is defined by the investment objective. So the investment objective clearly states what are the kind of strategies as well as what are the kind of investments that the hedge fund is going to make. These could be in equities, in bonds, in currencies, in commodities, across different asset classes, across different currencies, in different markets. They sometimes they don't normally deal with private equity. They largely deal only with public equity. So this is the case with the investing style or the investing techniques of the hedge funds. So they broadly invest only in these categories unless they are specifically in REIT. The fifth concept, what is NAV or net asset value? Net asset value is the value at which the fund is valued at, okay? So NAV is a very important aspect of understanding how the fund has performed. The net asset value is the unit value of the hedge fund. The investors then can buy into the hedge fund at this NAV. They also exit the hedge fund at the latest declared NAV. Again, this is a performance attribute. Why do we say it's a performance attribute? Because if NAV increases, then more investors are happy. The additional or new investors can come into the fund and they contribute to the AUM as well. So the NAV increasing is definitely a performance attribute. So there are two performance attributes that we've understood over here. One is AUM and the second one is NAV. Okay, now the question time. A, hedge funds dabble in risky trades. The second one, hedge fund takes capital from retail investors. The third one, limited partner in a hedge fund only contributes capital. Please identify which is the right one, I'm guessing. Okay, is it only A, that's hedge funds dabble in risky trades? Is it B or is it C? So is A and B correct? Is B and C correct? Or is A and C correct? Okay. So go back to those 3 points that were mentioned in the previous slide and let me know what is the right answer. In which case, please also tell me with your explanation why you think this is the right answer. If you like this new series, I would like to hear it from you. Thanks for watching.